In the summer of 25, we invested in IDEXX Laboratories. In this episode, we will take a closer look at the company, what it does, and why we think it's worth owning for a long time. Welcome aboard. So, Kalle, IDEXX Laboratories, let's call it IDEXX today. So, could you explain it in simple terms that what it does and what is the business model and who are the customers and what is the product?
Sure. So in simple terms, it's a vet diagnostics player. So say that you have a sick dog and you bring it into the veterinarian's office. Well, the vet is likely to take a blood sample from that dog and then put it into an analyzer that is sold by IDEXX. And that analyzers have these consumables, which is the really meat of the bones of how IDEXX makes money. But there are also labs that they own and operate if the analyzers then don't have the tests required.
So end customer is the pet owner, but then the main customer is this vet or vet clinic who buys this machine. And then you have the consumables, what is the meat of the bone, as you said.
That's right, yeah. The vets are the real customers for the consumables and for the lab services.
Okay, so that's the scope of the business now. So let's discuss about the scale. So is it a local player or is it a global player? And please walk us through the business figures a little bit and how it operates and what is the revenue, what is the scale of the business and how it operates in different countries.
Sure. So it's a global dominant player. So it has about 50% of the global market share. And this translates to roughly $4 billion of revenue. And 60% of that comes from the US and 40% outside of the US, mainly Europe. But do you know why it's 60% from the US if it's a global player?
Well, that's a good question. I think it's, first of all, it was established in US. It's a US company. So that's kind of like a home country bias in that sense. But maybe the second thing could be something to do with the pricing power or maybe about is there more dogs in the US?
There's actually quite similar number of dogs in the US as in Europe.
Yeah.
But really the pricing power, you're onto something there that they do pay higher prices for tests in the US. But also critically, one could say that in the US, they take a little bit better care of their dogs, at least if you measure it by how much they do diagnostic tests. So in the US, they do a lot more tests for their dogs.
So do you argue that US are more pet lovers than Europeans?
Maybe that's a little bit too far, but for some reason, the vets, they really like their diagnostics test, yes.
Yeah, I would say it's a more like a consumer behavior in US that you take your pet, cat, dog, or any other pet to the doctor more often than in Europe or elsewhere.
I probably think that's true, yes.
What else about the scale of the business? In which countries it operates and in how many countries?
So it's global indeed, so 175 countries, all the important ones, if we can say like this. And that means it sells to about 100,000 vet offices all around the world. So it's definitely a global player.
Okay, 175 countries, majority still in US, 60% of the revenue comes from US and then in Europe and also in Asia. Yes. Which is quite interesting.
Of course.
Okay, so it's a huge player. So let's dive deeper into the company's business model and we could evaluate the IDEXX through our 4 characteristics of a quality business: predictable growth, strong moat, strong financials, and then finally attractive valuation. If we look at the predictable growth trajectory, what makes you feel confident that IDEXX has a potentially nice revenue and earnings growth for the next 5 years at least?
So if we take a look at the growth driver first, on a high level, pets today live longer. And reason for that is because they have better healthcare, but there's also a stronger bond between humans and their pets. And so this is a little bit of a feedback loop, and people take better care of their dogs and cats, and they live longer, and yeah, it goes around.
And typically the last 2-3 years are the ones where you take a pet more often to the dog.
Exactly.
Because they're all kind of like problems.
Yes, and this then indeed is, well, very profitable for the vets and IDEXX as well.
Mm-hmm.
But if we take a look at that healthcare part, how does IDEXX really contribute to this? So that's in the form of developing better tests and also in educating the veterinarians. As I said, in the US, they do more tests, and this is part of IDEXX's campaign to educate them.
Yeah.
And a good example of these better tests and innovation that IDEXX has come recently out with is this fine needle aspiration tests for the new analyzers. So this is fancy terms, but what it really means in simple terms is that the vet at the office can take a cell test from the dog and quickly then diagnose if it has certain kinds of cancers.
Okay.
So this, of course, is quite attractive to vets because you can in minutes say if it has some forms of cancer instead of sending it out to the lab, and it takes a few days.
So growth drivers is a longer expected lifetime for pets, and also more new product launches for the vets who can then use it for the different kind of diagnostic test.
These are important drivers indeed. But
how about pricing power?
Pricing power is exceptionally good, yes. And perhaps it's a little bit morally gray area here. The truth is that there is quite a bit of price inelasticity. So the vets, they can push the prices to the end customers. Because if you think it like this, you bring a ill pet to the doc's office and they say, we need to run some tests. Well, at that point, you're not very likely to go shopping based on price, are you?
Okay. So if you summarize the growth trajectory, what the IDEXX management has said, and what is your analysis for the next 5 years, so what could it be?
So we think that we are certain that it will give about 9% CAGR in terms of revenue growth over the next 5 years, including some operating margin expansion thanks to operating efficiencies and more consumable sales. And this is indeed more cautious than management, which guides 15% of growth.
Okay, so we have some margin of safety in our own analysis.
Yes.
Well, that sounds really good. And if we think about a quality company, so one characteristic is compounding earnings effect. And that's why we love investing in those high quality companies. If we can be certain at some level that this earnings growth will happen in the future. But growth is not only thing what we are looking for a quality company. Growth is important, but then strong moat. The synonym could be high barriers to entry. In other words, it means that intensity of competition is low. And it can happen by the regulation. You have some regulatory barriers there. You might have a R&D, so technological leadership. You can have a very good like a lock-in effect with the customers, for example, or some other factors. So when it comes to IDEXX, what kind of characteristic or factors you see in IDEXX business model that they can maintain the market share and this pricing power in the future?
Yes, this is really the interesting part, if you ask me. And I think, unfortunately, the vet diagnostics market is not very competitive, no matter what the players themselves say.
Mm-hmm.
This is, of course, unfortunate for the end customer, but good for IDEXX. But why is it so? Well, we believe there's 3 reasons for this. One is that the customers, the veterinarians, they're quite fragmented customer group. But at the same time, they need high levels of healthcare services to offer to their customers, the end user. And IDEXX is then able to provide the analyzers, the lab, and the software all in one kind of a turnkey solution. And the second part is that it's dominant, as we mentioned earlier, but at the same time, it invests in R&D, so about 7 to 8% of revenue. And these R&D developments are very scalable. They can bring these new tests to their analyzers across vet offices or laboratories globally.
So in a summary, they can enforce this moat, the competitive advantage created by R&D.
Yes.
So not only provide a new products for the vets, but also improve the current ones, which makes it more important tool for a vet.
That's right. That's how they, let's say, widen the moat. But also in the industry, it is standard practice that you have long contracts with the vet offices. And this then makes it very hard for new entrants to kind of establish themselves and grow in this way.
Yeah, definitely. And if you think about there's like 100,000 vets as a customer, you have installed base. So it's difficult for a competitor to come with a cheaper price or even with a better quality.
Yes.
To make it like a good business for themselves. So let's move to the third pillar, which is a solid financials. And strong financials are typically a good characteristics or sign of a quality business. So this kind of like reveals for an investor that if you have a high margins or stable return on invested capital for a long time, so it's a good company, or it can be even a great company. So in an IDEXX case, so could you share some business figures so we understand is it a good or great company?
The business figures, the quantitative side, it's definitely reflective of a high quality company. So for example, if you look at the gross margin, it's over 60%, has grown very consistently, and on the operating margin, it's even more nice. It's over 30% now. And do you think are these good figures?
They are exceptionally good figures for this kind of business because if we think about like a IT company, intangible IP company, so those are not like a super good figures, but they might have like over 80% or even 90% gross margins. But for a business what manufactures a machine and then you have consumables, I think those are really good numbers.
Yes, exactly. So recurring and a tangible product, it's quite something.
I think IDEXX is kind of like a interesting company. It has industrial kind of like a way. It's partially industrial because it manufactures something. It's also technology because they have lots of technology there, and then it's also exposed in pharmaceutical, vet pharmaceutical, so to say. So it's a nice combination.
It's a cute combination, and I definitely love it. And on top of that, so it does have some investment needs in the R&D, but other than that, it's very asset light. So the returns on invested capital are over 40% in the last years, and also makes a lot of free cash flow. So that's of course a very nice bonus for us.
Yeah, free cash flow is nice thing for the owners like us because we can expect if we rely on that the management will take good care of this cash flow, meaning that they either invest it for the new expansion and market growth, they can buy their shares back, or they can return it for us as a dividends.
Yes.
The final piece in a puzzle is of course the valuation. And we know already from the experience that high-quality companies are not the cheapest one, at least not in a short term. So now if we compare the IDEXX share price and our 5th-year earnings yield estimate, what make you think and what kind of like a support, what was the idea to invest in IDEXX in 2025 June? Was it like a good investment decision based in a short history now?
Well, in the short history, indeed, June, as you said, so it's not been that long. Only 2 quarters or quarterly reports have come out. And we are very happy so far because the growth has actually re-accelerated even higher than we expected. So this is, of course, reflected also in the share price. But if we go back to like, what was different in June compared to previously, we have indeed looked at IDEXX before, and we have considered it to be too expensive.
Right.
So nobody questions really that is it a quality business or not. It's really always about the valuation. And during previous times, for example, in the pandemic, the expectations really got ahead of themselves as people brought pets into their homes. So that was expected to boost demand quite a bit. But in June 25, those expectations seem to have tapered off quite a bit, and we didn't see that. With some margin of safety, it was reasonably attractive.
Right, right. And now typical entry position when we invest in a new company is between 2 or 3% of the assets under management. What was the entry position of IDEXX at this time?
Yeah, it was pretty much right in the middle of that, 2.5%. And do we like this position? Yes, quite. And if the investment hypothesis continues to hold, that it grows in line with our expectations or better, KPIs look good, and the valuation, of course, is attractive, then we would increase our weight over time, either through share price appreciation or just allocate money into it.
Yeah.
But of course, as long-term quality investors, you can't ever fall in love with a company, no matter how strong it is in terms of quality. You have to continuously assess and be ready to sell it.
And basically, four times a year, we monitor and reevaluate the whole portfolio, including IDEXX. And if the IDEXX share price, meaning the valuation, is too far away, so we might even reduce it and take the profits out. But at the moment, it looks attractive business to hold for a long time. If it follows the investment hypothesis, we have placed our money.
Exactly. Yes. As long as it behaves well, it will be in the portfolio.
All right. Do you have a pet, by the way?
On IDEXX?
No. Do you have a pet?
No, I don't. I thought about getting one, but after reading about the price hikes on diagnostics, I reconsidered.
I used to have a really nice dog, and unfortunately, he died when he was 14. But the last 2 years were quite expensive.
I unfortunately believe you. Yes.
Right. Thank you for following us today, and a kind reminder, any company, IDEXX or any other company we have included here in this video are not as an investment advice. Our sole purpose is to illustrate what kind of businesses we invest in Sifter and what is our investment philosophy through IDEXX this time. Thank you very much, and have a great rest of the year.